Hey everyone! Today I'm diving into something really exciting in the world of cryptocurrency, the Dynamic TAO or DTAO, and its potential to revolutionize crypto liquidity and value in the Bittensor and TAO ecosystem. Let's break it down. First off, the introduction of DTAO could seriously change the game by increasing the demand for liquidity. Here's the deal. As TAO is staked in subnet-specific liquidity pools to get DTAO, it lowers the amount of TAO available in the open market. Now, less supply with maintained or increased demand, that typically means a price hike, making TAO more valuable. What about after the halvening? The fixed supply and halvening impact on TAO, similar to Bitcoin, the fixed supply cap and periodic halvening of emissions are designed to introduce scarcity, potentially driving up the value of TAO over time as fewer tokens are available for mining rewards. As the reward for validating and mining on the network halves, it naturally decreases the rate at which new TAO is introduced into circulation. Increased demand from subnets, each one of the 64 subnets competing for a share of the daily TAO emissions, creates a high-demand environment. This competition is especially significant given that only 7,200 TAO are emitted daily. As subnets strive to secure enough funding to maintain and expand their operations, the demand for TAO could significantly outstrip the supply, particularly post-halvening. Liquidity Pools as supply syncs with the introduction of subnet-specific tokens where TAO must be staked to obtain DTAO, effectively reduces the circulating supply of TAO. These tokens locked in liquidity pools are not available for general trading, which could lead to a decrease in market liquidity and increase the token's price due to its reduced availability. Potential for price volatility, the combination of high demand from subnets for operational liquidity, reduced emissions due to halvening, and significant amounts of TAO locked up in liquidity pools could lead to increased price volatility. Investors might see substantial price fluctuations as the network adjusts to these new dynamics. Moving on, subnets could become what I like to call black holes for TAO. They suck in and lock up liquidity, which not only boosts their operations but also makes them more attractive for investments. Validators and miners have a big incentive to hold on to DTAO, fostering growth and potentially higher rewards within their subnet. Think of it as nurturing their own little garden to flourish in the ecosystem. Now, with every subnet fighting to secure TAO to power up, we're looking at increased competition. This isn't your regular corporate rivalry, it's a battle that promotes innovation and efficiency. Each subnet has to prove its worth to attract investment, pushing everyone to up their game. Let's talk market dynamics. The scarcity created by locking up TAO in liquidity pools might drive its market value even higher. It's basic economics: less supply, more demand, higher price. This could make entering the market pricier for newcomers, but also means potentially higher rewards for those already in the game. Lastly, the long-term implications are huge. As the network scales and more subnets are added, the demand for TAO could skyrocket, especially if the network's utility and effectiveness improve. This could create a virtuous cycle. Higher demand leads to higher value, attracting more users and developers, propelling the ecosystem to new heights. Of course, the success of DTAO depends on careful implementation and ongoing adjustments. It's a delicate balance, but if done right, the impact could be monumental. Long-term sustainability concerns, the sustainability of such a system will be critical. If the value of $TAO increases significantly, it could deter new participants due to high entry costs. Conversely, it could attract more investment as the potential for appreciation grows. The network will need to carefully balance these factors to ensure long-term viability and prevent speculative bubbles. Thanks for tuning in, and I'll see you in the next one where we dive into how do you value this incredible opportunity, which would be like investing into 64 different projects. A near impossible risk, and how the UMA consensus is going to change our world.